Okay, here we go. This is our update on the broader markets. It is July 27th. We had the FOMC announcement today, 75 basis points, which is basically the expectation. And obviously, there was some additional commentary during the press conference. Seems like the market really liked that because there was an initial dip, and then we had a furious rebound. So we'll start with SPX. And I noticed in some comments, maybe it's a little bit hard to follow with the cycles. Please take a look at the description, or I should say links in the description for Cycles 101. There's a blog post and also a video. Just it's complicated stuff, but there isn't a lot of content around it. So I decided to just create the content myself. Please would love your feedback, but take a look. There's a lot of information there. So take your time to sort of digest it. So we'll start on SPX. So we did start today with a swing low, like before the FOMC announcement, and we just got nice follow through there, right? So once we went above the high from this candle, which marked the low, so that was 39.53 and about 22 cents. This is SPX cash. We did have a swing low. And then we actually made a high above this high here, right? Because this high is what marked the swing, the swing high, right? So I had marked, that's what this line is here, right? So this candle had marked the high. If you think back to like here, right? This candle had marked the high, right? And then we had to move lower below the low from that candle. So that was your swing high. And then we have this nice big move up today, right, to give ourselves a nice big swing low. So we went from a swing high to a swing low. Very, very bullish, right? Very bullish. You have to follow the price action, right? That's the point. Follow the price action. At the same time, and this is important, right? The details are always important details. It's day 26 of a daily cycle. That's probably kind of late, right? This last daily cycle was 25 days. Maybe we're going to get another cycle that's in that same range. Maybe it's 30 days. And these are trading days, by the way. The previous cycle was 54 days. And I've been trying to call this out, right? Imagine that this whole thing is just one big cycle. That would put us at 51 days, right? Because this is 25 and this is 26. So together, that puts us at 51. So we probably continue to advance. I think this is our next kind of level. I'll just put a sort of marker there. So you're call it the 4,200 level in that neighborhood. But on the underside of here, 4070, 4066 kind of area. You're going to see like what's the price reaction to that level, and then a move potentially. Wow. From there, you could see a 100-point move. So that's the interesting point here, right? Where you could see some really violent sort of short squeezes. Doesn't mean we're out of the woods, that we're back to all-time highs, but it just could mean we could see a little bit more juice in this daily cycle. But I can't imagine we're going to get too much more of a move before we get our descent into the daily cycle low. So this is where patience comes in, right? If one is long, use your stops, in the right way. But it's going to be interesting to see how much we can advance before the next move. And I would keep in mind, really importantly, tomorrow we have the GDP print, tomorrow morning. And we also have the CPI number coming out on August 10th. So there's going to be a CPI number every sort of somewhere between the 10th and the 13th of the month for the next, that's when the number comes out in general, right? So until inflation is not a concern, that number is going to be a significant catalyst for the market every time it comes out every month. So any day around between 10th and the 13th, that number is going to come out at 8:30, and it's going to be a big thing. Now, if we look at the weekly chart, and this is important, it's a very similar kind of idea, not necessarily the same count for each index, but we have the condition where we have a swing low on week 16, which was June 13th. So that might have been our weekly cycle low. It would be a really short weekly cycle, based on what we've seen over the last, call it 5 to 7 years. But there's no reason why that's not our weekly cycle low. I mean, that's a pretty dramatic move down. I mean, I guess let's see. I mean, in terms of price, it's not. I guess it's not that bad. So yeah, it's a 21% move down. That's a pretty big move for a broad S&P 500 index. So that could easily be our weekly cycle low. Here's the catch. This is either week 22 or it's week 6 of a new weekly cycle. Either way, we could easily get our, let's say this is not week 22 and it's actually week 6 of a new weekly cycle. It means that could actually be more bearish than the idea that this is just, let's say week 22 of a longer weekly cycle that's going to bottom on week, let's say 25 or 26. At the same time, there's also the possibility that we get a sharp move down that doesn't make a new low. So we get something like a triangle consolidation. That's how ETH and Bitcoin bottomed recently, actually. So that's important to be aware of, right? Like imagine, I just want to be clear on what something like that would look like. Like imagine something like that, and then we go up, right? So we don't make a low below here, which is what you would expect for your weekly cycle low, but maybe it's something like that. And so then you can kind of debate, was this the weekly cycle low? And it doesn't really matter. Follow the price action. The point is, this is now an emerging uptrend, right? That's the really important point to keep in mind. On the weekly level, we made a high, and then we made a low. This low is higher than this low. So that's a higher low, right? And now we've made a high, and now it's a question, can we hold? I mean, we certainly wouldn't really want to come down and test all the way down here. I'd say we really wouldn't want to get much lower than 38.42. But like, again, we could do something like that, right? And then just have a move up, right? And again, that doesn't mean we go back to all-time highs from there. It just means we could have a little bit more of a rally, maybe last even a month or two more before we have another big leg down, right? This is going to be complex trading, I suspect, over the next weeks and months. That's, I think, a really important point. So now we're going to watch. At this point, we already have a close above the 10-period moving average. You can draw any kind of trend line you want. We've broken it. And so it's going to be interesting to see how we close this week. We have 2 more trading days. But it would seem like we're going to pretty much confirm this is your weekly cycle low, and this becomes actually week 6, which means next week we open week 7, which isn't super early in a weekly cycle. It's not late either by any means, but it's not early. And so now it'll be interesting. Are we in for a 20-week cycle, something maybe a little bit longer? And most importantly, when is the top, right? Are we going to come in like here and then do that? Like how close do we get to all-time highs before we get that pullback? And again, I suspect if we move on to the monthly chart, we have made a major high on month 22 of the 3-year cycle, 36 months, easy math. That was in January. That's for the S&P 500. And so the next big level on the monthly is essentially 41.85. So if we can make that move above 41.85 and keep above that, that does give us a monthly swing low. That makes June a big monthly swing low, like big bearish red candle that we kind of almost like leave behind us if we're able to do that. But again, I'll just kind of continue to point out, you could see a world where we do something like even go like that, but then we come down. And then, so you notice I went past the 3-year cycle low line. So forgive me for taking liberties here. I'm not being precise. I'm just saying we could have a violent move up, but then a ratchet lower very easy, or we could have a sort of plunge lower. This is all relative, obviously. This is a monthly chart. But at this point, we're watching the levels. 41.85, incredibly important. If we can get above that, my God, that's a really powerful signal. And again, we have to stay above that. I'd say right now, most importantly, we really need to stay above that 39, 38 area. Like I'd say even 30, probably even more precise levels. If we look at the hourly chart, This is our big move up from the Fed meeting, like the Fed announcement, I should say. So if anything, actually, you probably don't want to see yourself below like 39.80 in that neighborhood, actually. Maybe call it 39.70, 39.67. Again, these are all ranges, approximate areas, but it gives you a good sort of idea. And the QQQ, same kind of idea, different count. In this one, when you look at the weekly, we're talking about the weekly cycle actually bottoming on week 13, which is really interesting, right? Like that would be a really, really early weekly cycle, but the price action is a price action. And again, in this case, we've already closed the week above the 10-week moving average. It's already curling up. This is a big, powerful hammer forming here. We still have 2 days to trade. We'll see how it closes. This would be week 19. Otherwise, week 6 of a new weekly cycle. So, I mean, this is by all accounts, bullish action, right? Very bullish action. On a daily, we have our new high. Oh, actually, whoa. Well, that's interesting. We did not make a new high yet, right? So 308.54, 308.55. Oh, wow. So we missed a new high by 1 cent, and then we pulled back a little bit. Now, I mean, we'll see. It's still a swing low for sure once we crossed above this. And I like the fact that this didn't gap up, so we don't have to worry about having to close the gap per se, because this was just kind of a clean candle. So now we have to, we're probably going to open inside on account of this upper wick. Now we have to just we'll expect some consolidation on this upper end here, and then I would expect kind of a push higher, at least to test this like 315 area. So another like 10 points of upside at least. But really, you want to see if you can get up into this stuff like 330, 340, right? That's where you get into that short squeeze area that we talked about, would kind of correspond with the S&P. And I called this out in my other video. We're much closer to making a monthly swing low on the Qs than we are S&P. For the Qs, it would be that 315 area. If we could get up above there, that would be our monthly swing low. Would be a huge, huge signal. So then we go to IWM, day 27 for IWM, and it did make a new high. So QQQ did not yet. We did get a little bit of a pullback here too. And here, similar to the S&P, same count. Week 16 looks like it was a swing low. It was your weekly cycle low so far. See how we closed this week. But that would make this potentially week 6. I have week 22 listed here, but again, you can just do the math. 22 is 6 weeks from 16. This would be changed depending on how we kind of close this week. The difference with the IWM versus S&P is that the previous weekly cycle actually was 31 weeks, so it was pretty long. So it does make sense that we would have a shorter weekly cycle. Still, same kind of really bearishness. You had almost no real rally, right? It died on month 5, and it really didn't do much. I mean, you had this big up. Like, this would be hard to trade. Like, this is kind of chop. Then you have this big move up. Then you have more chop. And then you have a big leg down. I mean, that just sucks. So we could be in for a nice little rally here. I'm eyeballing the 195 level. That's where you might see some structural resistance, and then just kind of that major high around the 210 area is the next kind of level you need to kind of conquer. Again, I suspect this thing has kind of made its major high in terms of the 3-year cycle, but that could still lead to a multi-month rally, even 2-3 months, right? And we can still be descending into a major cycle low. We'd need to get above the 192 area to get a monthly swing low. So that's going to be important. That's your next really big signal to be watching for, those monthly swing lows. And so I'll look at the dollar really quickly just for the sake of thoroughness. It really will change or dominate everything, right? So this is the weekly chart, and the dollar is live right now, which is great. I love that. I'll just zoom in here on the daily chart, excuse me. So we had our top on day 12. This is the second daily cycle of this weekly cycle, right? And so we had a low on day 18, and late breaking news, We are in the process of making a new low here on day 22, right? So I'll probably just kind of get rid of this. My expectation at this point, I mean, unless we get a bullish reversal on a lower time frame, we're going to make a low below this low here on day 18. So the daily cycle continues to decline. Now, here is where it gets really important, because the weekly cycle is also potentially declining, right? We have a high on week 6, and it is also a really bearish candle because it's a what is it called, a shooter, right? A shooting star, some people call it. You have a big upper wick, which just tells you there was a pullback there was a pullback on a lower time frame. That's what caused the bearish upper wick. And then you have bearish follow through the next week that creates a swing high. So below 106.895, you have your swing high. And now you're potentially getting follow through. If we make a new low, which is what this line is, but it's below 106.069, that gives us another new weekly low. So last week we made a new low on the weekly. This would be follow through, similar to this. Now, you then have to ask yourself, is that it though? Right? Like, do we get the sort of downdraft the next couple days of this trading week, and then next week we're off to the races, kind of like this happened, right? Again, we had this, and then we had follow through. Then we had a little consolidation, and then boom, boom, consolidation, boom, 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 right? Now, that's what we have to watch for, right? That's been your kind of pattern, right? You have this little consolidation, and then boom, 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 right? So that's going to be an important watch out. That's your weekly chart. And again, on the monthly, it is setting up to be potentially bearish, right? Now, I hope you've been following, if you've been following this channel, I hope you're starting to understand some key elements of price action. Because we have this huge upper wick, I mean, just look at it physically. I'll just kind of zoom in on it. This is month 18 of your 36-month cycle. And again, take a look at that link in the description to understand cycles. But even just beyond the cycles part, look at this candle, right? We have just a few days left of trading, and then we're going to have a new candle for August. Where is that new candle likely to open, right? It's going to open somewhere like right here, right? Because of this huge upper wick, which is another way of saying it's going to be inside the range of this candle for probably a long time, unless we have some big violent action that takes us higher or lower, which is like another example of that is this candle from March 2020. We all know that was the big COVID low, so it went really high and then it went really low and then just kind of came back to an equilibrium. Next month, which was April, you had an inside month. Month after that, also inside this month, but made a new low, and then we started our descent, right? But notice we were still inside this March range. This is April, this is May, this is June. Even with the big June month down, we were still inside the range of March. And then we finally broke that range in July. More downside in August. We had a little lower high in the next couple months, and then another new low. All that to say, you can imagine there's going to be a lot of price action inside this range now that's been created. That this month 18, it may be our weekly, or not our weekly cycle top, but our like longer term cycle top, like our 3-year cycle top in this case, right? Given again the way this can bounce around. However, the dollar, because the percentage moves can be so crazy, you could very easily get out of this range. Because if you think about it, the high on this is a 109 and we're at 106. Like, just think about that. That's only like 3%. Now that's an enormous move for a currency, especially something that's the world reserve currency, but it's possible. Like, there are catalysts out there that can make it happen for sure as well. So things can change very quickly on a dime, like the CPI print, any kind of thing, like, you know, again, in sort of mid or early to mid, or I call it mid August. But really important to understand the levels now, like, everything is going to be happening inside the range of this, unless we break this low, and that is at 104.742, which is, about 2% down from here, which is a pretty big move down for the dollar, obviously, which should be a tailwind for risk assets. So really important levels to watch. Really important. Really. We're gonna get some critical signals over the next few days, and into next week as we get that August candle starting to develop. Really, really exciting stuff.